Hey, it's Kristi. Let's talk about the foundation of finance. Thanks so much for being here with me. Let's break out Finance 101 to the most basic part of its core. So many people aren't taught this. I learned it the hard way. I want to share it with you. And this is just simply a blueprint on where to get started. I'm not going to advise you on where to invest or what to do. I just want to give you some very basic tools to get started. So first and foremost, the most important thing that you can do to get started is take a look at your credit report. Your credit profile screams what kind of a person you are on paper to those who are going to make a decision about loaning you money in the future. So it's really important that we have a solid credit profile created for you. If you are just starting off, I've got a couple of suggestions for you, or if you are in the process of building or reestablishing your credit, this part is definitely for you. So it's really important to have at least one credit card and at least one installment loan. So the credit card should be a bank issued credit card. If you have to start off with a store credit card, that's fine and dandy. Just don't max that baby out. It's really important that you know this and live through this your entire life when it comes to credit. Keep your balance 30% or below of your limit. I know that they've extended this amount of money to you to borrow against. However, you will get spanked and punished if you use over that. It's called an overutilization of credit. So try to get a bank issued credit card. What do I mean by that? Discover Card, Capital One, Chase, something along those lines, as opposed to like a store credit card. But y'all have to start off someplace, right? So sometimes it's just a store credit card or even a secured credit card. A secured credit card means it's your money that they're holding over here and you're borrowing against and paying it back, borrowing against and paying it back. Make sure it's reported to the credit reporting bureaus. There are some secured credit cards that don't report because it actually costs that company a couple dollars to be able to report it to the bureaus on a regular basis. So it has to report to your credit profile. Also, that installment loan, I want to make sure that you understand that it's something that reports. So if you think that your insurance or your cell phone bill or something like that is reporting, check your credit profile to see if it is. A lot of times you have to self-report, and it doesn't always show up on all three of the large credit reporting bureaus that make up your credit profile and your credit scores. So if you are self-reporting, that's great, but an installment loan, an example is a mortgage. Sometimes your rent can show up as an installment loan if your property manager presents it. Your auto loan, if you have a loan against your car, also student loans. So payment history is the most important part of all of this. It actually makes up 35% of your credit score algorithm. So make sure that you are paying those things that report on your credit report on time, every time, so that way you have an excellent payment history. And of course, the longer your credit history is, the better it is. So if you are young or you're just getting started with establishing credit, see if there's somebody in your life that has had a long-standing credit card, say a bank-issued credit card for 15 or 20 years. Minimum would be just a couple of years, but the longer the better. High limit, low balance, and ask them if you can be an authorized user on that credit card. You never have to use that credit card. You don't even have to own that credit card. You don't have to have it in your wallet. You just want to be added as an authorized user. And parents, if you have kids that are getting up to 17, 18 years old, add them to your credit card as well as an authorized user and help start to establish a credit profile for them. So if you have really bad credit, get it cleaned up. Go to a credit repair company or start making amends with the people that you owe money to. So you can go to annualcreditreport.com for your free credit report. It will show you everything that is getting reported on your behalf. And if there are inaccuracies or discrepancies, get it gone, make those go away, dispute it, and say why it's wrong information. Now, if you made a late payment last year and you just don't like how it's showing up, but you actually made that late payment, you can't dispute it because it's real. You had a late payment. It's okay. Moving forward, let's have a perfect payment history. And for a ton of really important information about credit profiles, credit reports, credit scores, visit my podcast. It's called Credit Coaching by Kristi. I have a ton of content there that you can learn anything and everything that you want to know about credit. So let's move on to the next portion once you've established your credit profile. And you must start with a budget. I know how that makes you feel. So instead of calling it a budget, let's call it a spending tracker. We have to see what's coming in and what's going out. There's a really good likelihood you are spending more than what you are bringing home, and that's why you can't get out of the credit card balances that you seem to maintain month after month after month. So if you aren't in that trap, let's make sure you don't get there. Look at your take-home pay and put that into your income portion. And we're going to base this off of a month at a time. So your take-home pay is going to be after all of those federal income taxes come out, your Social Security, your FICA, all of that, after your contribution to your 401k, and after the cost of your health insurance or any other insurances that you have there. So after all of your deductions, what is your take-home pay? Put that in, because that's what we're actually working with. And then make a list of everything that has your money going towards it. So start with those fixed items. We start with your housing cost. Your rent or your mortgage is fixed pretty much every single month, right? Your auto loan, your car loan is pretty much fixed. Student loan payments, those kinds of things. Write down those fixed things and then go back and add those things that are variables. Wouldn't you agree that your utility bill is a little bit higher in the summer than it might be in the spring? I know I've got the air conditioning running constantly during the summer, so my bill during the summer to the utilities company is like a couple $100 more than it is in, say, February or March. And then your gift giving at Christmas time or during the holidays is much higher than it is earlier in the year. So take into account all of those things. And then if you have pets, make sure you put down all of those costs for pets. It's not just, dog food or cat food, right? It's those vet bills, all of those other costs that come along with it. Kids, all of their stuff that they have to have money towards. So school uniforms or clothes, because they grow every single year. All of the sports or, the things that they're into. Your food costs, be real with this. Maybe go back and look at where you have paid to the grocery store and average it out. What did you spend last month? What did you spend this month? Average it out, and then make sure you put your dining and your entertainment and all of those things that you have your money going towards. I would encourage you to pull up a couple months worth of bank statements and look at where your money is going to. You're going to go, oh yeah, I forgot about this subscription, or oh yeah, I forgot about the money going over there on a monthly or quarterly basis. So once you have all of those, it's probably going to hurt because now you've answered where all your money has gone, because there's certainly not much left for savings. What we need to do now is flip that on its head. You have to get where you can start with 5% and then get to 10% of your money going into savings, paying yourself first before paying all of those other bills. I know what you're thinking. Right now you're saying, I don't even have enough money to pay all my bills without putting it on credit cards, without borrowing money, or without eating ramen noodles for 3 days before I get paid. There's no way I can put money into savings. I'm telling you, you can. Make it automated. Take 5% of your take-home pay, have your HR or your payroll company go ahead and put it in a separate savings account where you don't even see it. And then what's deposited, what's left, put into your checking account where you pay all of your bills. I call it my operating expense. You're going to pay all of those things out of there. What you're going to find is you're going to have to cut from someplace, and that's okay. So what can you cut back on? Can you cut back on your cable bill? Can you cut back on your dining out expenses? Can you cut back on your vet visits? Like, where can you pull a little bit of money from? Let's face it, you are working really hard for your money. Pay yourself first. You're going to start off with 5%. You're going to grow it to 10%. And then once you get a little comfortable, maybe you got a promotion and got a raise, got a little bit of extra money there that you're working with. Maybe you've paid off your car, you paid off a credit card, something along those lines. Start putting that money towards where it's 20% going into a separate savings account. What's really important is you'll want to start naming your savings accounts, right? You want to have a travel fund. You want to have your emergency fund. You want to have your house fund because you have a goal to buy a home. Maybe you want to start a family and you want some money over there so you can take some time off to be a stay-at-home parent for a little while. Whatever your goals are, name your accounts those goals and make sure that you funnel an appropriate amount of money into each account to fund it properly. And this is where things really start getting good, because you should, at this point in your life, start seeing cash flow, right? You've started to manage your bills a little bit better. You've cut where you can. You've got that forced savings going on over here, and you're like, whoa, look at that. I can do it. This is where you are going to create more value for yourself in your life. So every once in a while, we pick up a side hustle, or there's a gift, or you get a tax refund, or you've got a promotion. You've got this extra money coming at you. Maybe it's a bonus or something along those lines. Put that money to good use. If you don't assign it to something, guess what happens? I'll give you a chance to answer. Yeah, it's gone. It's just unaccounted for. It just disappears. Sometimes we go, oh, well, I deserve this, fill in the blank. Your goals deserve that money. So in the meantime, just for now, assign that money to help you hit your really big goals, because now you're creating value in your life. You're buying a home that's going to be building equity. You're paying off that car and driving that paid off car to work and to school and wherever you're going. So that way you could take that money that was going towards that car payment and putting it towards your bigger goals, your bigger vision for the lifestyle that you desire, the retirement that you want. Who wants to work until their dying day? Not this girl. So now with that cash flow that you're creating, with having your savings maxed out, earning more income now, having your bills at a minimum because you've gotten those under control, you're going to take that cash flow and you're going to max out your retirement accounts. Keep this in mind. The government caps how much you can put into your IRA, into your 401k. They do. So a lot of people start later in life because they're like, oh, I'll just make up for it later. I'll be making more money later. I'll just start later. I'll put more money into it. Well, keep in mind, the government caps how much you can actually put towards those accounts. So we tend to underestimate how much time we have to put towards it, and we tend to overestimate our abilities to be able to do so. So for me personally, I started at almost the age of 40 with my IRA and my 401k. Oh my gosh, you guys. And then to learn that the government caps how much I can put into that. Now I'm at a place where I'm making more money than I was, in my 20s and my early 30s, because that's the goal, right? To keep accelerating in our careers and earn more money. Well, now I'm capped on what I can put that money towards. So this is where you need to, once you've got your retirement accounts capped out, so IRA and 401k, and especially if your employer matches your 401k contribution, please max that out to the very max that they can do every single year. And it changes the cap every single year too. So I won't say what the cap is now, because by the time you watch this, it might be very different. So this is where you want to create passive income in your life. So what does passive income mean? That means it's income that is generated that doesn't require you to show up for. Think about it this way. The day you stop working is the day you stop earning. So you no longer have money coming in if you're no longer showing up to your work. So how are you going to fund the type of lifestyle you want to when you don't have money being earned any longer? This is where passive income is going to be very important, because quite honestly, those retirement accounts are probably going to be a small portion of what you're generating in income as a full-time worker in your peak years, in your 40s, 50s, 60s, when you're at the top of your game, at the top of your career ladder, where you're generating the most income every single year. So in order to generate passive income, you're going to take part of the income that you're generating now and put that towards things that can earn money for you. So buy stocks that have dividends. Consider buying real estate or a REIT, R-E-I-T. Those kinds of things can generate income for you over time. You don't necessarily have to be a landlord in order to make money in real estate. You can hold a note for somebody. So let's say you have enough money set aside and they need to borrow $50,000, and you know that they're going to be able to repay, but they can't go and get a bank loan. You can charge them a little bit of a higher interest rate because you're helping them out and taking on a risk that a bank wouldn't, and then they're going to pay you back over time with a monthly repayment on a note. You can do that for real estate. You can do that for somebody who's starting a business or growing their business. You can be the note holder, which means you're the bank, and then you're earning that money, that interest off of that loan that you have out there. Consider being an angel investor. A lot of startups can't go to a bank and get funds to start their business. Be very cautious with where you choose to put your money. please be very cautious. Do a lot of research, talk to a lot of people, and if you don't, go find yourself a financial mentor that can help guide you through making some of these decisions. And go talk to those people in your life that seem to have the most money. I'm going to tell you right now, the people who appear to be wealthy are usually just walking around with a lot of debt. They're borrowing for everything. They may not have a high net worth. They might just have a lot of debt. So be careful where you're going and seeking your advice. If somebody has borrowed for everything in their life, maybe take that advice with a grain of salt. But if somebody that you know has a lot of money in the bank and very little debt, and they seem to not be stressed out about money, go pick their brain. I know they would be happy to share with you their insights and maybe some of the lessons that they've learned in their lifetime. All right, those are the basics. Like I said, I wasn't going to tell you necessarily what to invest in, maybe just some things to consider and research to see if it feels good for you. I know for me personally, I don't love being a landlord. If somebody's late and I've got to go and assess a late fee and they're going through a lot of stuff, I feel bad. But it's a business thing. So I might be looking at other ways to invest my money in real estate that isn't necessarily me being the owner or the property manager of a brick and mortar home. So you figure out what works best for you. But a couple of things that I want to make sure that you leave with here today. Write out a budget and follow it and keep up with it too. Your budget changes over time. Your income, your expenses, your debt load, all of those things tend to change over time. So be sure to go back and update that spending tracker of yours. And don't necessarily use it just as an expense report. We don't want to just see where your money is going. We want to see where we can cut and where we can take from in order to maximize your savings. Once you've got that savings working for you, I'm telling you, that will be the snowball for everything, because you're going to find that you've paid off your debt, that you've got a retirement account getting maxed out for you, that you are putting aside some other money for those fun things in your life, for travel, buying that next car cash, whatever your goal is, you've got the money going towards that, and you're going to feel great every time you look at that growing balance every single month. And once you've created that value inside of your life where your money's actually working for you, then you're going to create those passive income opportunities. So that way you can finish well from your working years at an age that will make you excited to be done with working, and then you can have the type of life that you've created for yourself, whatever that looks like. I know for me, I'm going to be traveling all over the place, but I'm not waiting until I'm retired to be able to do so. I'm making that part of my budget now. I have no car debt, no auto loan. So instead of putting the $300 or $400 a month that most people put into a car payment, I've got that funding a really amazing travel savings account. So that way I can go and have some fun experiences while I'm healthy and young and able to do so. Don't put off tomorrow what you can do today. So if you make it part of your budget, you can experience all the joys that life has to offer to you. I hope you have some great takeaways from the basics of the financial foundation, and thanks so much for watching.